Good evening, everyone. My name is Bill Warner, as many of you know, and I'm with EntreDot. And here we are again on Monday night at 7 p.m. live. And we've got a really special treat for you here tonight. I'm an associate, not in his company, but maybe I can aspire to that someday. Maybe you make me a Bachman associate. But I'm going to introduce Ted Bachman, a friend of mine. We've known each other nigh on to 15 years, going back into the early 2000s. When I was a new consultant, and maybe he was a new consultant too, I'm not sure.
Pretty close.
But I know a lot of accounting professionals, and Ted is one of the best, if not the best. He's got a lot of experience. And I've asked him to be with us tonight and share some of his perspective on financial management. Now, if you know Ted like I know Ted, he knows a lot about financing, finances. So we picked three kind of focused areas to talk about, and that's cash management, probably the most important thing an entrepreneur has to watch, but some other important things too, but like financial accounting itself, like keeping your books straight and do it the right way, and reporting along with that, and then finally tax work. Because if you do tax stuff wrong, all forms of taxes, you go to jail, and they lock up your company. So Ted, welcome to Monday Night Live. Ted, tell us now that I've done this eloquent introduction. You tell them who you are in a whole lot better way than I did.
Well, thank you, Bill. I appreciate that. It's been good working with you over all these years, too. Pardon me. I started off my finance and accounting career with one of the big 8 CPA firms in New York City, and I started in audit and then transferred over to what we then called administrative services, which was the IT consulting. And I worked in public accounting for about 8 years. That firm was Arthur Andersen, and we spun it off. It was spun off to Andersen Consulting. It's now Accenture. So I had really both finance and IT background. When I left there, I went to in the food industry for the largest mushroom canning company in the United States for 8 years. And then I transferred over, and I ended up working later on in a high-tech manufacturing company. We were the second largest producer of touchscreens at that time in the United States. A lot of the time on the side, I was doing consulting work with small businesses, going back to, I hate to admit it, 1979. That ages me.
Okay, they all know now.
Yeah, they all know. They sure do. But one of the things that working with small to mid-sized businesses, especially those that are privately held, I found that I can have a really significant impact on those companies, and I can help them in so many different ways. And it's very rewarding and gratifying for me to be able to do that. I've worked in 30 different industries, and I'm always willing to help out any way that I can.
Well, okay then. A distinguished career, and more coming. You're still very, very active, I know. But look, let's get rolling here. Let's start with kind of an introduction to this subject. Explain in an overview kind of way the concept of cash flow management and why it's so darn important to entrepreneurs to get right.
Well, cash flow management is really nothing more than the collection of money, the handling of money, dispersing money, and really managing cash. You know, they talk about cash being the lifeblood of companies. And you heard the expression, I'm sure, cash is king. Mm-hmm. Managing the outflow and the inflow of cash, which is very important. And, because without it, it doesn't work. I've seen very profitable companies that didn't manage their cash properly. And even though they were very profitable, making good profit, they couldn't pay the bills. They couldn't make the payroll, and they ended up going bankrupt. So managing it is very important.
Yeah. If you don't, you run out of money, and then it's real trouble. So now, there are many things that a business can do to manage or conserve cash. Let's say it that way. There's a better way to put it. And to delay the use of cash so that there will always be cash on hand. So you want to kind of keep your cash until you really have to spend it. So share with us and the audience some examples of managing cash flow as well as conserving cash.
Okay, Bill. There's about 5 or 6 different areas that I think of, but the most important thing that I can say is whenever you're ready to spend money, sit down and ask yourself, especially when you're a startup company and your cash is lean and you don't have a whole lot of extra cash, always ask yourself that question: do I really need to spend this money? Do I need to spend it now? If I spend this money, is this going to be critical in making this company grow and in doing everything it needs for this company, or is this something that I can put off that expenditure? That's your first point. Now, in part of cash management, one of the key things is collection and another is payment. So let's talk about collecting the money. If you have a consulting business where you're providing services, for example, and maybe you have some contracts, those contracts are set them up so that you get paid in advance. Take at least a portion of it. If you can't get paid all of it in advance, depending on the size of the contract, get an amount up front, get a deposit. That way you're working on their money, not your money. Okay. Yep. So you want to work on their money, not in yours. I have a client that's 2 young men, Marines, both veterans, both went to Iraq, and they have a small construction business. And they found themselves last year that they hadn't set up their contracts properly, and they were spending money, and they had payment cycles scheduled, but they didn't schedule it right. And so therefore, they were putting out their own money to buy the materials to do this construction work. Yep. And they had to go back to their customers and say, hey, will you pay us now instead of according to the contract? And fortunately, the customers were understanding and helped them out. Yes, so but set that up that you're making those payments in advance. You're getting paid rather in advance. You get paid.
And when I mentor an entrepreneur, and most of the ones I work with are in services business of some kind, I try to tell them every deal you make in and of itself should be cash flow positive. So get the money to cover your expenses at the onset.
Absolutely. And for example, I'll use that construction business again as an example. A lot of times what they'll do is they'll get paid. It might be a long-term construction project, and you'll get paid some now, some up front, and then you have various periodic payments, but get those payments in advance. If I've been on the other side of the table where I was trying to conserve payments and I wouldn't make the payments until that contract or that construction or those engineers that were realigning the whole processing flow for the canning company, we paid like progress payments up to 70%, and that was usually the cost for these contractors. The last 30% was only upon approval once we had found out that they had actually performed and we were satisfied with their performance. So that's sort of the payment side. Mm-hmm. You have to look at which side are you on. You want to try to work it in your favor as much as possible. Now, if you have some invoices that you've paid that you've given to your customers and they haven't paid you yet, you can look at factoring that. There are companies that will buy those invoices and will actually pay you the money, a discounted amount, and you can get some money now, and that solves your immediate cash flow. That's not a bad thing to do. One of the other things is you have a problem with customers paying you. For example, I had one client that was in the cloud computing business, and he had some customers that were not paying, and they give them like about a 5 or 10 day grace period, and then they cut off their access. Mm-hmm. So if you're in that type of a business or software as a service or something like that, you just cut off their access, and all of a sudden it's like, oh, we need that, so we're going to pay you. And it's amazing. They'll give you a payment right then and there on a credit card or something like that, or a money transfer. So that's one way to do that. The next major item is payments, and we talked a little bit about payments. Typically, a lot of times you'll get bills, and it'll be what the payment terms would be 210 net 30. That means take a 2% discount if you pay it in 10 days or the net amount in 30 days. Well, that's an interesting thing because when you do the math and you say, what's that worth? If you pay it 20 days early, after 10 days instead of after 30 days, that's the equivalent of 36.5% interest rate. So if it's 110 net 30, it's 18% interest rate. And even if it's a 0.5% net 30, that's 9%. So if you're looking at that, sometimes it's good if you have the cash, make that payment in 10 days, take that cash discount as it's called, and use it to work in your favor. But if not, if you don't have the cash, then stretch it out the full 30 days. And let's be honest, a lot of companies are stretching it out even more. And I have clients that they're struggling to get paid in 45 days instead of 30 days. So sometimes you can stretch out your payments, but don't do it so much that it actually hurts your relationship with your vendors. Like you want to make sure you have good vendor relationships, but you can sometimes stretch that and nobody's going to say anything and nothing's going to happen. So it's something to think about. So that's some of the aspects from a payment point of view to look at. One of the other things that we do in Bachman and Associates, we're all independent contractors, and we understand what it takes, to get paid by our client or whatever. And so we have an understanding that when we get paid, the subcontractors get paid. You might set up the same thing that, if you have subcontractors, now if you have employees, you got to pay your employees, right? Yep. If you have subcontractors, you might say, when I get paid, you get paid. It also gives you a bit of an advantage because if there's a problem with the contract work and your client doesn't want to pay for it or is hesitant or there's something, you go back to your subcontractor and say, you got to get the work done and get it done right. So that gives you some real leverage over the subcontractors as well in controlling your business. The next major area is capital purchases. You may or may not get involved in capital purchases if you might, be depending on what it is. I had one client that was putting in water coolers, and he had upfront, so it was like it cost him about $1,000 to install the water cooler, buy it, install it, and everything else. And then he had payments, he would lease it out over 5 years. Well, his biggest problem, he had that cash flow up front, $1,000 to go out. And it took him over 2 years to get his money back from a cash flow point of view. So that was a challenge. And what we did is we looked at different types of financing for that. So if you have capital purchases you have to buy, whether it's a significant computer, let's say a software as a service industry, and you have significant computer equipment, IT equipment you have to buy, you might look that you need to run the business. You might look, instead of buying it, you might look at, number one, financing it. Number two, you might look at leasing it. And this all, because that equipment's going to last you maybe 5 years, let's say. So why not pay for it over 5 years instead of paying all of it now? Don't use your money, use somebody else's money. And that brings me into my next point.
Yes, sir.
92% of the businesses that start with their own money. So that's an important thing to think about if you're starting a business, and that where are you going to get your money to start with? If you don't have it yourself, or if you need it, you could then look at bringing in some investors. Well, the first place you'll look for a small business is friends and family. Maybe there's somebody you know. Maybe there's somebody in your family, a rich uncle or aunt, and they're willing to bankroll you. They know you, they love you, they want you to be successful, and they're willing to say, oh, you're my favorite niece or nephew or whatever, or son or whatever, and I'll give you some money to get started, or I'll loan you some money that you have to pay me back. If you're going to go outside the friends and family, you might look to an angel investor or some other private investor. Think Shark Tank. What's the Shark Tank going to do? They're all going to say, I'll give you X number of dollars, but I want X% of the business. So you're giving up part of your business and part of the control of your business. Many times these financiers like that, they want to control it and they want to tell you how to run your business. And that's an important consideration. If you're looking at bringing in a business partner, and maybe it's a silent partner, you're going to do the work and he or she is going to put up the money. Just make sure, or even if it's a working partner, you're going to work together. Having the right business partner is very important. Think of it like a marital partner. You didn't marry your spouse on the second date. You took time to get to know that. I hope. You took time to get to know that person. And once you knew them and felt comfortable with them, you can do it. Real quick story here. I had a person I was working with on a job, a major job. And, we landed this major contract and it was going to be a whole year, full time for the two of us. And at that time, we're both independent and the contract with our client was one-on-one. With the client and him and with the client and me. And he said, we really ought to have one legal entity. And I said, yes, I agree. And he said, well, let's use an LLC. And I said, okay, I'm fine with that. And at that time, I wasn't sure of all the idiosyncrasies and ramifications of what's the best legal entity, LLC, S Corp, C Corp, sole proprietor, partnership, et cetera. And I said, okay. And he says, well, by the way, I said, well, let's set one up. He said, well, we can save some money. I already have an LLC set up. Oh. I hesitated. And I said, no, let's start a new LLC for just this business. He said, but I already have it. Why should we spend that money? And the harder he pushed, the more I pulled back. As it turned out, that LLC had owned 2 restaurants and they had not paid the payroll taxes. And about 8 months later, the IRS seized his home. Oh, so make sure you know them really well before you get into a partnership. And start a new one. It doesn't cost much money to set up an LLC or an S Corp. And the annual fees are not that great.
A couple of $100. That's it.
Pardon me?
A couple of $100.
Yeah, that's exactly right.
You do it yourself.
Yeah. Now, the next aspect of using other people's money are banks. Banks are surprisingly, they're odd in many ways, I'm going to say. If they're financing equipment, they're usually, for example, I teach a food truck class at Wake Tech Community College, and banks are very willing to finance 100% of the truck and the equipment that goes in the truck. And they'll finance 80% of the soft costs. Soft costs would be like your computer equipment that you need, your software, other things that you're going to have to go along with that. But if you, let me throw out a quick example. Let's say a food truck costs $50,000. The equipment in it costs $10,000. So that's $60,000 total. They'll finance the full $60,000. And let's say you have another $5,000 for soft costs that you're going to need, a point of sale piece of equipment, and everything else, printers and stuff to go with that. And so they finance 80% of that $5,000. They're going to finance $64,000 of the $65,000. Now, let's say you have $20,000 or $30,000. Don't use your money to buy that. Finance it, and then take your money and use it for operating capital. In a food truck business, for example, you need to buy inventory. You need to buy food and all the condiments and all the things that you need to sell. So use that for your operating income, and maybe you've got employees. Make sure you pay that you can make payroll. You might also look at getting a line of credit with a bank, an operating line of credit with a bank, and that can also be used many times for these operating expenses. It covers short-term cash requirements, like you got payroll you have to meet every week, and your next major payment from your customer or client isn't going to be until later on. So that's something to look at. You could get a line of credit or use your own money that we talked about. The last point under this section here is you want to maximize your revenue, minimize your costs. You gave some really good vlogs recently here this past week, Bill, about gross profit margin.
Mhm.
That's your revenue, your selling price minus your direct costs of that sale,
Mhm.
your cost of goods sold. Those are really important. You have to make sure you have a good profit margin. And I've worked with companies and they were just cutting it too thin. One was a military contractor, and he was the best supplier. And I said, "You're cutting it too thin on this quote, on this bid."
Yep.
He really wanted to bid, but he had to stop. So that's pretty much, I think, where we're heading here, Bill.
All right. Good examples. Very helpful. Yeah, in one of those videos, I said the only thing between your gross profit and what you take home is all that operating expense. Make sure you have enough to cover it, plus leaving 20-25% for you. So,
Yeah.
okay, we're going to switch gears. We're going to talk about accounting and reporting. So share your perspective on the importance of having professionals do this work for the entrepreneur instead of them rumbling their way through this themselves. And they're not professionals in accounting.
Yeah, you're exactly right, Bill. Take your knowledge, your expertise of your business and your industry, and focus all your effort, energy, time, and money on your business, on growing your business and running it most efficiently, increasing your revenue, decreasing your operating costs, and becoming more efficient. Don't waste your time on the penny ante stuff of trying to keep track of it. Let somebody else do the bookkeeping and the accounting. Let that professional help you in selecting software that's going to be best for your business and your industry, and then setting up a chart of accounts to track all of your accounts, all of your expenses and everything that you're going to ultimately need for the IRS for doing your tax returns. And so take advantage of their knowledge and expertise and let them do the detail work. You focus on your business. Also, that expert can guide you and avoid so many pitfalls and traps that you could run into. For example, are you a payroll tax reporting expert? No. Do you know that you have to file a 940, a 941, a UC2, all of these for the federal unemployment tax, the state unemployment insurance, your workers' comp insurance, and all those different types of payroll-related expenses? So let them take their knowledge and their expertise. And like me, I've got 30 plus years of experience doing this, and I know a lot of the things, and these experienced people can help guide you avoid the pitfalls and become much more efficient and do things much more quickly. So that's it. And I think a mentor can help you both in your business and your personal expenses. And one of the things you always want to think of is, why are you building this business? What's your exit strategy? Are you building this to develop legacy for your children and grandchildren, for an income for them in their future? Are you going to sell it? Are you going to do an IPO, an initial public offering, and go public? If you're going to sell it, take a few years in advance of one of these experts to help clean things up, make it much more appealing, and also make sure that you're training your replacement so that people in your organization can run it and that the organization isn't dependent on just you. I know that's not cash flow, but that's an important part of a business strategy.
So I think it's pretty darn clear we both agree. Get a pro. But look, once you got one, what's going to be the relationship between the accounting professional / mentor and the entrepreneur? How does this work between the two?
Yeah, I sort of touched on that a little bit, Bill, earlier, and this is where that mentor, that advisor can be a tremendous asset to you and help you in so many different ways, because this mentor has had experience in not dozens, but maybe hundreds of different companies and can help you in so many different ways, can provide valuable guidance and advice in managing your business, significantly improving the profitability and the probability of success.
Yes, sir. So this is the person you can rely on to keep you straight and let you know what's going on periodically, say monthly.
Yeah.
was.
Yeah, that's right. Every month he can help you look at it. You develop a business plan, you develop a financial forecast together, you develop a budget, and then every month you look at that. Or on every contract, you look at every contract individually. I have a home builder in the area that he literally every week sat down with his project managers and reviewed every home and every one of his projects, major home building contracts that he had every week.
So all of this reporting that adds up January through December is a lot of information, much of which, in fact, all of which, the summaries of it, all that is, are leading you up to tax time, that full time of the year, March next year. So what more will have to be done to pull together the information for preparing for the tax return and actually completing the darn thing and all the paperwork involved?
That's a good point. If you've set things up properly and you've done the proper accounting as you've gone along with the help of the mentor, get some good accounting software for a nominal amount of money, and you'll have it and you set up the chart of accounts for you. All these expenses will be in the right account. The capital expenses will be in the right assets and the liabilities and everything as you go along, the equity, and it'll all be set up for you so you can do that. One important thing is to manage your taxable income so you can reduce the tax burden over time. And I don't have a whole lot of time to get into that, but there's one client I worked with, and just simply his CPA was saying, "I'm doing great. You haven't had to pay any taxes at all in 4 years." Yeah, but what he didn't realize is he was costing him $40,000 to $50,000 a year on the average, because he was going to be looking at being in the 37% tax bracket in just a year and a half. And he took all the deductions and expenses up front. Manage that taxable income. One of the benefits of having a business is that there are many expenses that you incur today that are not deductible. They're just personal expenses. Yeah. But as they're ordinary and necessary business expenses, for example, a cell phone, a computer, internet service provider, a printer, office supplies, all the paper and everything, and ink or toner for the printer, travel expenses. I have clients that live in Texas that are one of my 6 closest friends lives in Texas, another in Pennsylvania, another in Maryland. I go and visit them, and by the way, my daughter's in Texas too, and I go down to my friend / client in Texas, and my travel is deductible now. So those are some things to do. Another quick thing to think of real quick, and then we're running out of time, is tax benefits, tax and financial benefits of hiring your children. You can look at the differential tax rates and keep more money in the family by hiring your children. I can talk to you about that later.
Yeah, okay. We are going to wrap it up here. Look, I know that you know, and I bet some of our audience knows, that this is a subject that we could have carried on for another 2 to 3 hours. It could have been a weekend seminar for that matter. You really want to get into the details of this. But the thing that we try to get across here is after all said and done, get a pro to help you with this. Don't try to do it yourself. Especially, once you've started, if you've got some revenue coming in, you're spending a lot of money, you got to be able to account for it properly. And report on it properly.
Exactly.
In wrapping it up, Ted, what are your final thoughts on being financially responsible entrepreneurs? Let's say that.
Yeah, number one, plan ahead. Have a good business plan. Have a good financial plan, financial forecast. Have a budget. This expert can help you develop that and can do that. And you'll need that, by the way, when you go to the bank, whether it's an SBA loan, I didn't even mention that, or a regular loan, or an investor. They want to see what that's all about. Mm-hmm. So have a good plan. That experienced professional can help you, guide you through it, avoid those pitfalls, save you a lot of time and money. Mm-hmm. If you give him $1,000 and he saves you $10,000, that's smart money.
Sure the heck is. Hey, Ted, I thank you greatly for being with me tonight and being with our audience and sharing three most important aspects of financial management. Because in any one of those, if you don't do it right, you're going to lose money or run out of money or go to jail.
Yeah, you're right. You don't want any of those to happen. Thank you, Bill, for having me.
My pleasure. You have a great evening, and thank you, audience. I put Ted's contact information back up here, so you'll be able to see it in the video, but there it is. Email Ted. He's wonderful to talk to, as you just experienced, and I'm sure he'd be very interested in talking with you about your business too. So with that, we're going to wrap it up, Ted. Have a great evening.
Thank you. You have a great day also.
Yep.
Bye-bye.